Hey, what's going on, guys? It's Terrence Ray. I got another stock market update for you. I'm gonna take you into the closing bell today. Um, what I got pulled up right now, this is the TastyWorks trading platform. So you can see got the Tasty hourly top equities. So these are the top equities running through the platform as of right now, as of the last hour of the day. And you're looking at the top of the screen, you see Tesla. Tesla's up another 3%. I believe it was up a little bit more than that throughout the day, and I think it may have pulled down some. But we gotta see, you got Meta, which had earnings. So Meta had earnings, and then you got Meta up 22% currently. Amazon, everything on here is green, so you can see that all the traders were trading basically with the market. I presume you do have gold, GLD, the ETF, and then you have Starbucks on here, the only two red in the red. Let's take a look at the Tesla chart. Let's see. Looking like my screen froze up. And I may have to pull up. So I wanted to take a look at the Tesla chart, but doesn't look like it's loading. So this is what I'm gonna do. Let's open up. We'll open up Thinkorswim. I'm gonna open up Thinkorswim and then switch back over. So just bear with me. So basically, you can still see my quotes are updating. The S&P future up a percent, a whole percent and a quarter. The NASDAQ futures are beasting today. You see the NASDAQ futures are up 3%. We got the Dow futures up. Well, excuse me. The only thing that's down out of the index futures is the Dow futures. The Dow is actually down, which is kind of odd that the Dow would be down when everything else is up. The Russell is up. You can see the Russell was up almost 2%. Now we got the bonds. Now I actually have positions on in the bonds. If I pull up the ZN, I have a call spread on. We can take a look at that. The option chain is still updating. You can see I'm right here on the dance floor, right? So it's, I'm still not quite my call spread, the short option isn't quite in the money yet. So I am on the dance floor as far as that's concerned. And I still have 22 days on this. You can see I'm down about 78 bucks on it. I still have like I said, 22 days. So I would like for the chart to update, but we're not getting it. Which is the only thing about pulling up these platforms, getting them to run like they supposed to. So just bear with me. I'm actually, that ain't working either. Let's try something else. We're gonna do something else. I'm gonna pull up Trade and View. Let's see how Trade and View work. I just want to be able to look at the actual. Let's see. I just want to pull up. We're just gonna use the free one. Let's go to here. Make this big. Take over that. Now I just got to get to the chart. I'm not paying. I'm not paying for anything. I just want to bring up my. Once I should be logged in. I'm already logged in. Here we go. Now I just need to get to my charts. Go right here. And I'll be able to pull up what I wanted to look at. So one of the main reasons why I rarely go live because of the buffering. And so here we go. We got the SPY pulled up, but I want to look at, Tesla. So here we go. We're looking at Tesla. You can see, like I said, it actually opened up like earlier today. I think it was up double digits on the percentage. And you can see it kind of pushed back down. And so now we look like we got, when you get a candle like that, we'll see how this closes at the end of the bell, at the end of the day. If it closes with a candlestick like this may signify that maybe tomorrow, in a few days next week, you may get a pullback. That doesn't mean that it won't resume its upward move, but I'm guessing that maybe we'll get a pullback after this if this candle closes like this. Let's take a look at. I did want to take a look at the /ZN, and we could talk about that. We'll go to the futures. So right now I just pulled up TradingView just because I couldn't get my platform was bogging down, acting a little slow. So instead of using the app, I can just come in here. Let's look at the notes. Where you at? The TN. And I actually have a call spread on here. So the thing about that is this. I put that call spread on after I got this low, this high, this pullback, and this lower low. So it ain't looking too good right now. Now, if tomorrow it comes and then takes out this high, like I said, I got 22 days, but I'm almost guessing if it takes out this high that it's going to resume this uptrend. So I may close it and take the loss. We'll see how the market opens up tomorrow. And I actually put on a bullish trade in Novavax. I think that's how it's pronounced. Let's take a look at it. Novax, and I think they have something to do. What is it? NVAX, is that what it is? Novavax. So you're looking right here. You can see I got a high and I got a low. And then today it looks like now this green candle was up further earlier today. And it looked like it's getting ready to cross over right here and had these moving averages cross over. So I went on ahead and sold a put. I sold a put at the $10 strike right here. And I still should be able to, let's see if I can pull that up. You guys can see that. Let's go to that position. And you can see where it's at. I'm out 43 days. Right here, I got this put right here. And so the market is currently trading around $12. So the thing about selling puts, which I actually think is one of the best ways to get long initially, instead of just buying shares, if you can get something for the put. I got a high IV rank, of course, because you got earnings here. But earnings is still 25 days away. Now, with me selling this put here at $10, what happened is, let's say the market comes against me and I got put this stock. My cost basis would be, because I collected, if you look right here, what's his field, I collected $111, $111 in premium. So it would be, my cost basis would be $10 minus 111, which would mean I would be in the stock with 100 shares for $8.88. Excuse me, $8.89. I'm sorry. So that would be my cost basis. And I'm cool with, if you're looking at this, let's see if it updates. This is the one that I had it on anyway, so you can see that. So if you're looking at this right now, you will see $10 is like right here below this low. So technically speaking, if I get the move that I expect for it to pop up here to 15, I'll take 50% of this. I'll take about 55, 60 bucks and be out of this trade and look to go put on another one. Depending on how long it takes, whether it decays or not, I can always roll out in time and then manage the trade, right? I could take this, buy it back, and then roll out to 78 days and then pick up some more premium. So I'll do, trade management that way. I don't believe I can roll future um option positions yet. I don't know if they have that capability yet. So it's a little bit different when you trade in options on futures. I think you literally have to close it out and just reopen the position, reestablish it. But in this position right here on the stock, on this equity, I don't have to have a realized loss if it goes against me. Like I said, once it gets down, if it were to come back down around $10, and that is the closing bell. Once it got down back around $10, I would just buy it back and roll it out. So it would look something like this. So what a roll is, if you're not used to rolling options, it would be something like buy that back, right? So you just would be closing that out. Then you would come back down, pick one of these, any expiration you want really, but more than likely it's gonna be 50 days or 78, and say 78, and then come down here and then sell that. And you see, you would be, if I did that right now today, I would be doing it for a credit of $55. I would pick up more premium and buy myself more time to be right. And if you look down here, you can see it. I'd be buying back the short option at 43 days and then selling out the 78. And that would be that. That's how I would manage that trade. One of the things that I want to talk about today was Ray Dalio did an interview. Let's see if I can pull back up. Ray Dalio did an interview this morning on CNBC, and he actually was talking about, so he made some comments in reference to us having like a, I don't know if his exact words were global meltdown, but that's kind of like what he was insinuating. And if you know anything about Ray Dalio, he's been talking about, the economic clash coming with China, and basically, you know, um, the thesis that China at some point will become the new, one. It's already a world power, but like the world power, and we're already trending that way. And he also was talking about like cash being a major position, like cash, they used to say cash was trash. And he's not saying that anymore. He's saying cash may not be a bad position at this time. You know, just going into talking about yields and things of that nature. So I did want to touch on, like, now this is something that they don't talk about on TV. Like, you can, if you have experience with, you have certain brokerages, access to brokerage where you can do trading. I know on TastyWorks you can trade yields. Like, you can literally trade the yield. So your yield would be coming over. I'm gonna come over to the watch list, and then I'm gonna come over here and go to futures, and then we're gonna go to small exchange, and then you see right here where it says 2-year, 10-year, 30, and you could trade either one of these. This is your 2-year. That's the spot price, and this is the actual futures of it. You got the small 2-year, the small 10-year, and the small 30-year. And if I wanted to, I could come over here to the active tab. Everything just look like it's moving slow. Come over here and click on active. And I already have it for futures micros, or I could change it to futures small exchange if I just wanted to isolate it to the small exchange, or just leave it on. I like to leave it on futures micros, because most of the time if I'm doing any type of futures trading, I'm trading like the small, the micros. I don't trade the large contracts. And you come over here, and then you would find, if you wanted to buy the 10-year, you could do that. I'll link that video of that interview. It's a little small clip from CNBC. I'll put it in the notes where you can watch it if you want. And he was talking about 10-year yields, and this is how you would trade that. Or if you want to trade the 2-year, the 30, they even got the 5 on here. You would just come in here and you would click buy. And if I wanted to do it, I would hit send, and it will margin the account $517. and I could literally just trade and get long the 10-year yield. If you want to get short and you want to sell it, you can trade it outright right here. So there are ways to get that exposure to trading yields. If you want to trade that, if you don't want to just, generally what you have to do is trade bonds, because if the 10-year yield is going up, then consequently the bonds should be coming down. I hate that the fact that you got to be able to improvise. Sometimes I hate the fact that my chart screen has locked up on me. However, what I'll do is I'll come over here and we'll pull it up on TradingView. Let's see if we can find 10-year yield. It's probably going to be on the futures. Let's see. Let's go 10. There we go. Micro 10-year yields. Now, the only thing about it is, you see right here? So this is how it looks right here, right? So you see how the 10-year yield got this type of look to it? See how you got this red candle? Now, remember what I said about the bonds? I'm going to go back and look at the 10-year bond again. But you see how it looks? Now, if you wanted to buy this and go long, you could do that. Like I just showed you. Now, or you can also trade the 10-year note. See, directly opposites. So you can trade that relationship. You can trade what Ray Dalio was talking about. There is a way for you to trade that biasness that he has. So let's see. I took notes because there was some things I want to talk about. Of course, we know Meta had earnings. The earnings in Meta, it was they announced that they're gonna do $40 billion worth of buybacks. That's a lot of buybacks. That is a lot of buybacks. And that's why you see this move right here. Now, you may say there's nothing wrong with that. And I mean, a company is going to take care of its shareholders. So if you don't like it, you want to take advantage of that, become a shareholder. Buy shares of the stock. The only thing I'm going to tell you is you got to gap up from, what is this, roughly, what is that, 153 all the way up here to 183. Basically, you got a damn near $30 gap. You're going to, I'm willing to bet, and I probably and I'm literally willing to bet because I'm probably gonna place a bet at some point and go the other way on this, that you're gonna get this is gonna fill. We're going to get a gap fill. So don't worry about it. And we got a hole here. So we probably get a gap filled here. Now, they say don't try to time the market. If you go back and read what was said and you believe in the stock, then you just buy the stock. And if you got time and you don't need the money that you're trading with, like right now, you can sit on it. Yeah, and you don't trade, that's fine. Buy this stock and then sit on it and just wait on it to fill this gap. I think at some point it's going to fill this gap. I don't know how long it's going to take though. So that's one of the things that, buy and hold. Buying and holding is probably the best strategy. You'll never hear me say anything different. It's just that some people just don't, like me, as boring. I like to trade. And I think you can make more money by actively trading than you can by just sitting and buying and holding. Because you're going to wait however long it take for it to do whatever it is you think that it's going to do. And then at what point do you sell? At some point, it's not a realized profit until you close the trade, till you sell it. So at some point you got to sell it. So you still going to have to time, getting out of it. But it's easier to do when you just buy it and hold it. Like if you just bought it down here, you already doubled your money. So that's the thing. They announced buybacks, $40 billion worth of buybacks, which is a lot. I was watching a CNBC, and they was giving out, like, I think in the past 10 years, Facebook hadn't done um, that amount of buybacks, if I'm not mistaken. I think they said they did like maybe like 100 and something billion over like a 10-year period, if I'm not mistaken. And they're gonna do 40 billion like maybe in 1 year, or I don't know how long. Not even I don't even know if it's gonna take them a whole year. But you won't know that until the next earnings, when they announce, what they did for the quarter. So that's that on that. And I also wanted to talk about consumer staples. I think I'm gonna say that for another video, because I wanted to go over the consumer staples. The consumer staples is basically, so right now you're seeing like all the growth stocks, what they would call like basically risk on and risk on. So the riskier stocks are being bought up. Like, let's look at AMC. Look at AMC. Even AMC got a bid under it. Now, I looked at selling a put in AMC. I still may do it. The setup is there. I mean, you got a high, you got to pull back, and then you got a gap up. So the setup is there. But I sold the put in Novavax. So I said, well, I'll wait, and then I'll take a look at AMC later. But this is this is what you would call risk on. This is a risky stock, and so as opposed to like a consumer staple, I'll give you a consumer staple. This is a consumer staple. General Mills. General Mills is a consumer staple. And these are things that people, they have food products. They, make cereal and other things like that. So when times get hard, money get tight, you can go buy a box of Cheerios. You can go buy a box of cereal. That's and you can see that consumer staples over the past year or so, look at what it's been doing. Just drifting up, just going up. So now with consumer staples making this turn, right, to come down, now your riskier equities are being bought up. And so the next video I do, I am going to go over like a list of consumer staples, show you how to find those. That's mainly like your Coca-Colas, your Pepsis, your Costco, your General Mills, your like the things that people spend their money on a regular basis, no matter what, for the most part. Now investors are now selling those stocks and then taking their money and buying the riskier stocks. That's why you see all the growth stocks, basically the stocks that generally don't pay dividends. They're jumped up to the forefront, and they're all going up at this current moment. We are supposed to be getting earnings today on Apple. I don't know if they've come out yet. But I don't see that they've announced it. I don't know if the earnings have come out yet. So we can talk about, I'll do another video and go over maybe the earnings of Apple. And maybe we'll talk a little bit. We'll talk some Apple, some Amazon. Both of them are up. They gapped up. At this point, look at this gap here. Amazon is running right into some support. Some resistance. You got right here, you see what this gap is? That's right here where Amazon is, and you got another gap here. So they got earnings right into resistance. So we'll see how that pans out. And then I have a video for you guys tomorrow. We'll go over that. May even do a little opening bell stuff. So with that, guys, hit that like button, hit the subscribe button. Let me know what stocks you're looking at. Let me know what you're bullish on. Like what do you have like that you waiting on to get a better price, or what stock do you think it's gonna be a great stock for the year and one to buy? Put it in the comments and let me know. With that, guys, I'm gonna be out. Peace. Peace.